Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting on the low time frame with the first bullish scenario where we're looking for an impulsive structure to the upside with then a flat in wave 2 for a 3-wave A, 3-wave B, 5-wave C, which preferably is already finished, and we're looking for continuation to the upside. Now that does mean we are then looking for a running flat where wave C is not taking a low of wave A, and it is the least common flat structure, but it is a bit more common in trending environments. The most common flat is an expanding flat where wave C ends below the low of wave A, but I don't really enjoy that because this wave A is already very deep, retracing to the golden pocket. For an expanding flat, I prefer wave A to go to the 3A2 or the 0.5 Fibonacci taken from the low to the high of wave 1, then get a 3-wave move up for B and a wave C that then goes to the golden pocket or the 786. But this wave A, as mentioned, is already very deep. Now we do have some support at least at the 786, right? In case price does come down, we can observe the reaction between 43.8k and 44.1k. What is nice is that finally the 886 probabilities played out. Price overhit the 886, had a bit of a move to the downside, but this retracement was very shallow. If you took a fib from the high here to the low, only hitting the 236, so also increasing probabilities. This was corrective for a move to the upside. Very nice taking this high. Where do we reject? We rejected at the first target box that we mentioned over here between 48.7 49k for then that impulsive move towards the downside. It has to be said that this wave 2 is quite long in time. It is 4 times longer than this wave 1 to the upside, which is uncommon, but still a possibility. And the invalidation for this scenario is price taking this low. The second bullish scenario, not preferred compared to the first one, but still one that I like to highlight, is this scenario here, where we are looking for a diagonal structure and then a wave 1, wave 2, wave 3, then we want to see a wave 4, and then eventually a wave 5. The reason that this currently has lower probabilities compared to the other bullish scenario is because of this wave 1 and this wave 3. All of the waves in an ending diagonal structure have to be zigzag structures, which means that in a wave 2 we can't have a flat. And that is the reason why this wave 1 cannot move to the left side over here, because then we have a flat structure inside a wave 2, which isn't allowed. Wave 2 and 4 can only be zigzag family structures in a 535 or potentially even a double zigzag. So wave 1 has to be up here, where this then is your 3-wave structure in wave 1, but that means that this second leg is incredibly short compared to your first leg in an AWXY, where usually for wave Y the minimum target is the 0.618, which as you can see is not hit. Secondly, the wave 3 over here hit the 1-to-1, taken from the low to the high of 1 to the low of 2, meaning this wave 3 is longer in price than wave 1, which is not preferred because a contracting diagonal is by far the most common diagonal structure in a 1, 2, 3, 4, 5, and the moment wave 3 is longer than wave 1, it lowers the probabilities. It is not an invalidation for a contracting diagonal, but it does affect the probabilities. And if we think about expanding diagonals, well, expanding diagonals are very rare and never preferred. And then finally, of course, in wave 4, we are looking for a 3-wave structure, but your first move is already very deep, which means the retracement has to be very high as well, and then you want to see another low made below this low over here, which of course is also not looking too great. The validation of this scenario is price moving below this low over here. If you then go to the first out of the two bearish scenarios, then the first one here is a very big ending expanding diagonal in a wave 5. Now you can see this is a huge structure for wave 5, and I also like to show you the wave 1 that we have to compare it with, which is this structure over here. You can see if we look for a 1, 2, 3, 4, 5, or at least a 1, 2, 3, 4, 5, you can see that this wave 5 is much bigger compared to this wave 1. Now in an impulsive structure, wave 3 tends to be by far the longest, most impulsive, highest volume structure, and then wave 1 and wave 5 tend to have a relationship with each other between the 0.618 and the 1.618 fib time, and also price wise. Now wave 5 can extend quite big, but the fact that this wave 5 is so so big already lowers the probabilities a bit for this scenario, besides the fact it is an expanding ending diagonal on a 4-hour time frame, which is very rare. An expanding diagonal in general is very rare, so therefore this scenario is never preferred unless all of the other scenarios fail. Now if we look at this scenario, then wave 2 retraced to the 886. That is a common target for an expanding diagonal wave 2. Wave 3 went to the 1.618 trend-based fib extension taken from D's pivot, which is a common target for 3. Wave 4 retracing to the 886, common target for wave 4. And then your wave 5, well, the common target is over here for your wave 5, and then a WXY double zigzag where a flat structure is allowed in wave X. And as you can see, we did reject from this area. However, an expanding diagonal is a rare structure and therefore never preferred unless all the other stuff fails. If we then go to this ending diagonal where we have the end of wave 4 over here, and this is your wave 5, which means that your wave 5 arguably over here looks better compared to your wave 1 down here as well, right? So that is why I like to cover this potential scenario. It doesn't look too great, and that is because of the relationship here between wave 2 and wave 3. If we put this wave 2 on the left over here, right, where we then have a zigzag in a wave 1, then we have over here a zigzag in 2, then this wave 3 is massive, and then a wave A, B, C. So context-wise, not too great, but also then wave 3 has to end over here, right? This is then an A, B, C ending over here, but that gives us a problem for wave 4, because then wave 4 is going to have a flat structure inside, which is something we don't like to see. So we can move wave 3 to the right, but that then means we have to move wave 2 to the right as well. But that then means that this is going to be your wave 2. And as we know, only allowed to have zigzag structures. Now you can have a zigzag here, but that means you still could have a zigzag here, okay. But a double zigzag structure and then a WXY double zigzag, wave Y has to move below wave W and then a sharp corrective structure, WXY double zigzag, where wave X preferably is not hitting the 0.7 Fibonacci taken from the high to the low, from the high of 1 to the low over here, which it did. The price action here also hit the 0.7 plus wave Y is not lower than the, wave W, which, you know, is not really great for the probabilities. And also if this is then your wave 3, then as shown earlier, this final structure to the upside did not hit the 0.618, which also lowers the probabilities a bit. If we look at the CVD divergences, then this bullish CVD divergence has now played out as price took this high over here. Now with this drop to the downside, we do again have more bullish CVD divergence here, higher low in price, lower low on the CVD, but I prefer to look for CVD divergences on the right side of the recent high and the recent low here, so I like to give price a little bit more time. And if we then look at the probabilities of the different scenarios, then yeah, probabilities, right? Now based on Elliott waves here and the different scenarios, I would argue that the probabilities remain higher to see higher prices. An expanding ending diagonal for wave 5, the really big structure, right, has low probabilities, and the local ending diagonal, which we had over here, is also not looking great as explained. The preferred bullish scenario for me would be a higher low with then a running flat structure and not a market structure change. So preferably price not then taking this low over here with the info that we have at the moment. I do really like to stress that price is at risky levels, right? We are at potential wave 5 ending levels as well, anything between 46k and 55k, right? So trade safe, have a solid plan, solid strategy, and especially have good risk management. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.